On a Tuesday, fears and worries were back on Wall Street. The reason behind this was the move by Moody's rating agency, which caused doubt on the stability of the US financial system. Shocked by the collapse of three US banks, the stock market immediately responded with a wave of panic and a sell-off in the banking sector. Today, the market may take a breather from the recent turmoil. The macroeconomic calendar is uneventful on a Wednesday, and investors are cautious ahead of the inflation data release. Analysts at InstaForex have analyzed the situation and are ready to present their fresh overview of the US trading session. Summing up the results of the session on a Tuesday, US major stock indexes closed in the red. But there is still a silver lining, as the top stocks managed to retreat from yesterday's lows. At the opening of the session, indexes were losing between 0.8 and 1.1%, but by the closing bell, they managed to recoup some losses. Thus, the Dow Jones lost 158 points, or 0.45%. The Nasdaq dropped by 79%, while the benchmark S&P500 index plunged by 0.42% to close at 4,499 points. Top US stock indexes were trading mixed throughout the day. At first, stock futures were showing moderate gains of 0.12 to 0.23%, but later reversed and tumbled into the negative zone, losing between 0.1 and 0.3%. The S&P 500 is projected to spend the day in the channel between 4,460 and 4,520 points. All three major Wall Street indexes closed lower on a Tuesday after Moody's downgraded the credit rating of several lenders, reigniting fears about the stability of the US banking sector and the economy. Moody's has cut the rating of 10 banks by one notch and placed 6 banking giants, including Bank of New York Mellon and US Bancorp, under review for possible downgrades. The rating agency also warned that the sector's credit strength would likely be tested by funding risks and a weaker profitability. This forecast put pressure on the banking sector, with the shares of Goldman Sachs and Bank of America sliding by about 1.9%, and the S&P 500 Banks Index dropped by 1.1% on Tuesday, having lost 2.5% so far this year. Reaction to the bank downgrades pushed up the market volatility index, which reached a 2-month high at some point. 8 of the 11 major sectors of the S&P 500 declined, by the energy sector recovered from the initial decline caused by disappointing data from China and closed with a 0.5% uptick. Surprisingly, the stock market gained support from the Fed official Patrick Harker, who said that the regulator may leave the rates at the current level. Absent any alarming new data between now and mid-September, I believe we may be at the point where we can be patient and hold rates steady and let the monetary policy auctions we have taken to do their work, Harker commented. Besides, the Philadelphia Fed president noted positive shifts in inflation and advocated for a cautious approach aimed at doing no harm to the economy. The healthcare sector also contributed to the optimism in the stock market, supported by the positive dynamics in Eli Lilly. The shares of the drug maker jumped by 14.9% to a record high on news about strong quarterly earnings. On a Wednesday, US stock futures rose on dovish comments from the Fed policymakers, but then retreated. The trading activity was somewhat subdued as investors were waiting for the key report on inflation. The U.S. Consumer Price Index for July is expected to accelerate slightly compared to the same period last year. On a monthly basis, consumer prices are projected to rise by 0.2%, showing the same pace as in June. This price data will be crucial, while Patrick Harker thinks that the U.S. Central Bank may leave interest rates unchanged. Some central bank officials are still leaning towards a different view. Thus, Michelle Bowman said on Monday that the combination of the still elevated inflation and continued economic growth means that further rate increases are very likely. In any case, until the situation clears up, investors will continue assessing risks for the financial system and keeping their focus on the banking sector. Today, the macroeconomic calendar is empty, and Fed officials will not deliver any speeches. That's why traders may shift their attention to corporate reports. Today, all eyes are turned to the Walt Disney Company, whose shares jumped by 0.8%, and the giant will disclose its corporate reports and plans after the market closes. Meanwhile, shares of Arriving Automotive added 1.5% amid a better outlook for early production. Markets are approaching the end of the reporting period, which turned out to be better than expected. According to Refinitiv, of the 443 S&P 500 companies that have reported earnings as of Tuesday, 78.6% beat analysts' expectations. The situation in the currency market is also quite calm today, and the US dollar index is still under pressure because the Federal Reserve may keep the key rate unchanged. And during the day, the US dollar index was trading near 102.40, which is 11% lower than yesterday. Analysts suppose that it may start hovering within the range of 102.10 and 102.70. The US dollar dropped on Wednesday amid news that last month the Chinese economy slid into deflation. In July, consumer prices in China decreased for the first time in the last 2 years, and analysts had expected the report to increase interest in the greenback as a safe haven asset. Instead, the data supported the idea that the Chinese government may resort to monetary stimulus to boost the economy. However, this reaction could last only for the next 24 hours, and the fact is that on Thursday, the US inflation report may drop a hint about the future movement of the US dollar index. Meanwhile, the Canadian dollar managed to rise from the lows recorded last Wednesday. However, today it was losing value. During the day, the USD CAD pair was trading at 1.3440 or 0.18% higher than yesterday. And the next trading range is between 1.3420 and 1.3480. The Canadian dollar opened the trading day with a rapid decline. Then the currency reversed following oil prices. Oil reached new highs on Wednesday, and thus Brent crude touched the high recorded in April. The Brent benchmark added 1.1% to trade at $87.14 per barrel, while WTI increased by 0.9%. Oil prices showed the sixth weekly growth in a row, thanks to the lower OPEC supplies and hopes for economic stimulus in China. On Tuesday, the Council of Ministers of Saudi Arabia confirmed its support for OPEC Plus precautionary measures to stabilize the market. Notably, the Canadian dollar's appreciation is capped by the economic situation in Canada, and the country reported the largest trade deficit in the last 3 years. As for the cryptocurrency market, most assets were trading in the green. On Tuesday, BTC managed to break above $30,000. On Wednesday, it made an attempt to return to the level of consolidated there, but all in vain. Until the end of the trading day, the asset was hovering around $29,920 or 0.2% lower. At the same time, such altcoins as Ethereum, Solana, Ripple, Binance, and Litecoin dropped by 0.3%, rose by 3.55%. Bitcoin received support on Tuesday thanks to renewed fears about the stability of the US financial system. In addition, the asset was also boosted by PayPal's announcement of its own stable coin. And this momentum was not enough for a rally, but it allowed BTC to change the limits of the trading range. And now the asset may trade between $29,600 and $30,000. A settlement beyond the limit could lead to a decline to $29,200 or a jump to $30,500. This is how InstaForex analysts see the trading day in the United States. Our team is constantly monitoring key events, allowing you to keep abreast of the main trends and risks. We remind you that feedback is very important for us, so that we can understand your trading interests and strategies. Share your opinion under the video, and we wish you profitable trading. See you soon!